Welcome to Moneycontrol Live. I'm Manisha Gupta, and the focus today is on cotton prices, where the international markets are trading at a 16-month highs, and the Indian prices in the past 1 month also have surged up by nearly 14%. This is even as the crop is estimated higher, but it clearly is about the demand and the global trade, which seems to be picking up. But what are the details within all of this trade? For those questions, let's go across to Mr. Arun Sekhsaria. He's MD at Dwarkadas Group. Mr. Sekhsaria, hi, thank you so much for joining us. What's your sense really when it comes to the price rise that we've seen into this space? I mean, a 14% increase in the Indian market, 17% of a jump up in case of international markets and cotton prices.
The prices have gone up quite significantly, and it was not something which was not expected, number one. Number two, the international prices have increased mainly on the ICE exchange, because you see prices in last 3 days, three trading sessions, it has increased by nearly 650 to 700 points. Is there any fundamentals to it? No, because the outstanding OI position on the ICE for May and July, particularly for May and July, is controlled by the specs, which they don't believe on fundamentals, but they are mainly they get a grip of the market and they take it to the end. Like they don't just sell it immediately. But as far as demand is concerned, if you're asking me, is there a demand? I don't think so. There's any demand of cotton to the extent of what the prices have increased. Mainly, there are exports which have taken place from India because Indian cotton bases have gone down. At its nearly lowest, it's about nearly 800, 700 to 800 below ICE price. So that's a very, very attractive sign for Indian exports. But who are buying? Question is, are the mills buying, or they are purchasing at the people who are hedging it on the ice and storing it on the various shores of various countries? So I think more it is 70 to 75% of the cotton is stored in warehouses against hedging of ice, and 25-30% mainly from Bangladesh and Vietnam to some extent. A couple of contracts here and there in other countries, they are buying cotton. But we were expecting Bangladesh to be a very large buyer, but due to various problems in Bangladesh, mainly about the foreign exchange and payments, there is very few suppliers who are wanting to sell in Bangladesh. China, again, is not a buyer at this point. They are for Vietnam, their mills in Vietnam, but very, very small volumes.
Mr. Sekhsaria, with the kind of gain that we've seen in cotton prices in India, a double-digit growth really in last 1 month, with this jump up also, would you say that the Indian cotton is still competitive in the global markets?
Of course. If you see the prices today, if you see Indian prices are about 6,000 rupees at spot at the origin. And if you see the ICE, it's coming out to nearly about 65,000 rupees.
Okay.
So it is competitive. But then the question is, are there any buyers at this price? Same question we had about a couple of years back when prices touched $100,000, 100,000 rupees. Will it find buyers? That time, this is so bad that you ask any mills, are they buying at this level? No.
Mr. Sekhsaria, how is the condition in the Indian markets? I mean, we do understand that the mills are buying, the prices just seem right. But again, for the Indian markets also, is it the mills buying, stockists buying, multinationals buying? The Cotton Corporation of India also has seen some buying coming in. How would you bracket all of this demand within the country?
Okay, so I'll put it into 2-3 phases. Number one, are the mills buying? No.
Okay.
At this point of time, I don't think so mills are buying, except those mills who are only buying on day-to-day basis. They are only the buyers. But if you're talking of any mills who are going to buy for next 2 months, 3 months consumption, absolutely. Number two, are the MNCs buying? Absolutely, because for them, this is a very, very good, attractive price to buy cotton because they are hedging it on ice and they are able to get it below the ice levels. So, which is very, very cheap price for them because their trade is on basis and basis is not it has to go up. Either the ice will come down or the Indian prices will go up, which is unlikely. So the only option is ice coming down. So I think for them it's a win-win situation, but then it is to be seen because there's a lot of mark-to-mark also being absorbed by them. Out of pocket is going out from their cash flow. So how long can they absorb this? So as far as exports are concerned, I don't think so. There are exports, very big buyers are there of exports. Again, hedging is taking place. As far as ginners are concerned, yes, of course, they are holding on the cotton. They are the biggest beneficiaries of this cotton because from 55,000, the markets have gone up to 60,000 rupees. So they are in for good money.
Absolutely. And are the prices expected to go higher even from here? I mean, are they going to be in further profits from here on?
Yeah, as far as technicals are concerned in ICE, today we are at 101, 101.50. And all the analysts and whatever we have, we understand about the charts and all. We are looking at another upside of at least about 4 or 5%. Then if you see the December price vis-a-vis July, there's an inverse of nearly about 14 cents. Now, is this 14 cents going to be borne by anybody? That all the physical cotton has to be sold before this price, or it has to be priced before July. Can it happen? I don't think so. It can happen. So the question, the thing is, if physical cotton prices have to start coming from June if it remains at this level, and the inverse remains at 14 to 1500 on inverse on July.
A final question, Mr. Sekhsaria. How are you looking at the textile demand right now? Is that improving as well? I mean, we've all seen the Chinese numbers, which have been quite uneven. But when you talk about the textile demand, domestic and international, what is the sense that you're making of those numbers?
Well, if you take in India, the out of 100%, out of 100, 30 is consumed locally and 70 is exported in different forms, whether it's in cotton, whether it's in yarn, whether it's in garment, fabrics, etc., etc. So out of that 70%, the demand for export is hardly about 40%. Okay. So if you see 50% is that there is a drop in the export market in all segments, all value addition. And domestic market is concerned 30%. Again, we are looking at markets are moving, but not to 30% level, maybe about 20, 25, 15 to 18 to 20, 22%. So there is a slowdown in all segments of the value addition. And if everybody is sitting on inventories, number one is because of buyers are deferring the shipments. Number two, the freight costs have gone up significantly because of the Red Sea. And China is again a factor because China is not buying as it used to buy before. And after the Chinese New Year, the demand is not revived up till now. So I don't see very major demand. The mills would be buying at this level.
Fair point that. Mr. Sekhsaria, thank you so much for joining us here at Moneycontrol. So clearly the market seems slightly skewed at this point in time. There's not so much demand, but there is definitely people sitting on inventories, anticipating higher prices in cotton going forward. And that clearly has led to a lot of gains. There has been, of course, some short covering as well, but we already have seen 14% of gains in cotton prices. And from here, another 4 to 7% not ruled out.